Hey everybody, this is the Disruptor coming at you. We're going to talk about all the craziness you're seeing in the market right now. What's happening? Everywhere I turn, I'm seeing somebody talking about a bearish market, a crash, a correction, all those words. What's going on? What's happening? Let's dive into it here. Today we're going to be talking about SPY. We're going to be talking about, is it a correction? What to expect? We're going to be talking about breadth, which means like how many stocks are really participating in anything moving forward, where we stand, the percentage of stocks above a 50-day average or above a 200-day average. We're going to be talking about relative strength. I'm not talking about RSI. What I mean here is which stocks are performing better than the rest of the market in a time when most of the market's kind of sucking balls, The other thing is playing Monday, how we're going to approach Monday, what we'd be looking for, and what it would take for me to put some cash on the table. And maybe you can reply back in the comments and let me know what you're thinking. So let's dive into this. First thing you got to talk about is SPY. Terrible weak candle right there, just crashing down on us. That pink line across, that's my 200-day moving average. So we have crossed below the 200-day. Nothing good happens below a 200-day moving average, right? We know that's not where we want to be. You can start thinking, okay, where are some possible levels here? If I were here, I might be looking at like where these tops are. Obviously, we've passed that one, right? But then this one right here is pretty much where we might be hitting. This right here as well. You can start drawing these across. You can do some Fibonacci retracements, see what works for you there as well. But let's talk more about what we're looking at moving forward. So this is something I pull off barcharts.com. I'm a big user of the site, love it. Percentage of large cap stocks above the moving averages. This is just phenomenal. I mean, SPY right there, only 7% of stocks in SPY are above the 5-day moving average. 5-day, you really want to be above the 5-day. That's where you're getting some bullish movement, some good trend. If something's below a 5-day, it's generally heading down. So that's always good. Look there at the bottom, utilities. Up here we have 25%. We got staples. Energy, notice energy has really had a rough week here, right? It's really dropped down. But if you go back to 50-day moving averages, 100-day, 150, the green is still there for sure. Lots of relative strength in energy, consumer staples, and utilities. And we'll talk about the significance of those areas coming up. So that's really important. Financials, a lot of people are really rooting for financials there. Financials kind of took a break. Real estate was doing really well. That took a break as well. We're going to dive into some of those a little more, but let's keep it rolling here. This is a great thing. Definitely go check it out on Bar Charts. It's available to anyone for free. Great table. The first thing I want to talk about is utilities, right? So here it is. This is a comparison chart of utilities with SPY dating back to November 1st, and you can see utilities being that kind of purplish pink color, right? Then it was really underperforming SPY. But then look at that, like in late November, it really rose up and started competing with SPY and outperforming it. And then SPY took that major downturn that we're all really familiar with, and utilities just keep on cranking. That is something that we need to be aware of, because when the defensive sectors start to lead, things generally are suggesting maybe a bear movement, a bear market. So we need to keep that in mind. So utilities, definitely outperforming SPY. You can go back to that previous chart that I was showing you. There's utilities down at the bottom right over here at 32% of their stocks are above a 5-day moving average. The next thing I want to talk about is consumer staples. This is something I put together on a Friday. I wanted to show here was XPX, $4,397 when I put this together. Here's our sector map, right? This is how the sectors were performing for the day. And there we go. I'm trying to find my cursor. So how the different sectors were performing for the day. Communication services having a terrible day. This is where we're talking about the amount of consumer staples above these different averages, just like we saw in the previous chart. But look at here. These are all staples that were showing green, right? They had a decent day, you know, when everyone's portfolio, I know mine, was definitely suffering. Staples is doing something. It might be a safe place to put your money. If you're just looking for somewhere to put, if you're not interested in being 100% cash. So here's something else that's really interesting. On Friday, I wanted to run new 52-week highs. This is it. These are all of the companies that were hitting 52-week highs that met some of my other requirements. But this is really interesting. Again, we see here's a utility up on top, American Electric Power Company. We've got some staples here. Sorry. We got Hershey's, PepsiCo, Procter & Gamble. Procter & Gamble has just been doing great as far as a staples goes. I mean, just really strong chart. So I would recommend on these rough days, run a scan like this, 52 week highs. Where are they? And you can see in the sectors here, you've got some foreign telecom that's a little interesting. So this is what I want to dive into. This is not my chart. This comes from wallstreetcourier.com. Great website. I highly recommend that y'all check that out. This is a chart of theirs that I think really sums up what's going on. And when we talk about a market top, we see energy right there at the top. And look what follows. Utilities, consumer staples, right? That's where we're going from a market top to a bear market. So when these started to participate, it got a little scary for some people because we start seeing, wait, if these are leading, we might have an economic cycle here that's moving us into a bear market. Now, I don't think this is a bear market that would last us years. This might be something that lasts us 3 to 6 months, just part of a larger bull market where we kind of go down, just some good, healthy kind of correction, basically. And then we maybe move higher. I don't know. I don't have to know. All I need to know is what's happening now and how I'm going to adjust what I'm doing. And maybe you can get some ideas here how you might adjust it. But what I'd love to is in the comments, throw the way you're going to approach on Monday, because Monday's got a lot of eyes on it. I want to talk about breadth here. We've talked about sectors. We talked about what's performing, what isn't performing. But when we talk about breadth, what we're talking about is the percentage of stocks that are above a certain average. That's a great way to measure it. So when we look here, percent of total stocks above a 50-day, you can see that we're right here on this little pink rectangle here. That's a line that I've drawn that's just kind of like, I don't want to be below that. And we are right there at it. You can see here that we had some, we dipped below back in December. We remember December was a little bit of a nerve-wracking time for us. And then that candle shot up really strong and got us. But notice, even with the momentum behind that, we got a new low. We didn't make a higher. We got a lower high. My apologies. We made a lower high. We didn't make a higher high there, right? That's significant. That's something we need to talk about, think about, is that we want to see higher highs here, right? We want to get out of this funky area, right? But now this one, a good buddy of mine, Jonathan, who's a CMT, someone I respect dearly, he suggested I not use these guppy moving averages, so I won't have them in the future. But I just love the way they look. But basically, if this were a stock, you would not invest in this, right? And this is the market, right? Look at that candle right there. That's just horrible. And this is the percent of stocks above a 200-day average. So clearly, stocks in general are just sucking, and we've seen that in chart after chart in this presentation here. So you know that is real, that is happening, and it's something that we need to be aware of. I really want to see this trend here move up. I want to see getting into higher highs instead of lower highs there. And then I would feel like, yeah, we're really, really moving up. Clearly back in what is that, August, November, and December, all the way up to February, those are just great months. Just the majority of stocks were participating. Everyone was like, wow, I'm making so much money. That's the kind of market we really want to be in. And we're in the exact opposite of that right now. So here I'm pointing out the different sectors. You can see here we've got energy, staples, utilities, technology, healthcare, and consumer discretionary. And what I want you to see is I want you to notice, like right here with the energy, notice that here we are on December 20th, that low, well above that, right? Notice here, December 20th, right? We're above that consumer staples. In fact, we didn't even really hit a low around there, but back here in November we did. So that's doing really well. Utilities, again, we have moved down below December 20th, but not below December 6th, right? Over here on technology, look at that. We've just completely gone below those lows, right? That lets us know that technology could continue to fall. If it does, we need to be aware of that and know that maybe technology is not where we want to be, or at least we want to be very careful with where we're looking there. Healthcare here, we've got our low December 6th. We're pretty much right at it now. That's an area that you need to be careful about. Slippery slope. Look at this one, consumer discretionary. Consumer discretionary basically works inverse to consumer staples. And consumer staples is doing great. Consumer discretionary, the exact opposite, doing quite poorly. And these are the things that people buy when they can buy what they want. And yeah, good stuff, but it's just the chart's not looking good. Let's look here. We've got financials. Financials had a great run. Everyone was saying the regional banks are going to go great. They really took a tough turn here in January, and now they're looking at these lows again. We've got industrial section. Looks like it might be hanging out, and if it is able to stay above that, then that's the third consecutive higher low, which would be great. Communication sector, I mean, this one has just been sucking for a while. It's having a really hard time. A lot of people talk about buying bottoms. Now is not the market to be looking for bottoms. Now is the market to be looking for strength. And then over here, we've got materials, XLB, right? Materials hitting that low right there again. I'm wondering what materials does here. Real estate, similar, hitting those lows again. But look at gold, right? I mean, that right there, you couldn't get more bullish than that in this market. In fact, gold might be, yeah, it is. Gold is the most bullish chart we have right here. And gold has really had a rough go. So if you're looking at this saying maybe now's the time, you got to realize like this has been beaten down pretty hard, and it might be a good value buy. But I just love that trend. It's going really well. So I want to talk about Monday, how we're going to approach it. And what I wanted to do is I just pulled up another chart of SPY. This is during the dip in October. You can see that ultimate low on October 4th. And what I've done is I've dropped in an 8-day moving average. Okay. And I want to talk to you about fake outs, right? So here we are, we're going down. Price rises above this 8-day. And you might think, boom, I'm in, I'm buying. And then look at that. It whipsaws right back. Nothing good there, right? So what I want to show you is with this 8-day moving average, if it's slanted downward, right? Even if price crosses above it, it's not a safe bet. You really want to wait till, look here, it levels out and then it curves upward. At this point right here, you know that you're in an uptrend. Now you might have missed this piece right here, and maybe you want the whole thing, but you can't be greedy like that. You just can't, not in this market. You want to save yourself. You want to protect yourself against risk. You want to see the 8 moving up like that and then price crossing above it. Now, I love the 5-day, but the 5-day is a little too sensitive in something like this when you got whipsaws. I really recommend that 8 on there. And then you can see right here, again, it dipped below the 8. Looks like it crossed above there, but the market started having trouble right there. That's November 15th. We kind of know what happened after that. So cheers, y'all. I hope this was helpful. I'm really glad to be back on YouTube. It's the Disruptor over on Twitter. You can call me Jay. Reach out to me in the DMs. Chat me up in the comments. Hey, even like the video, whatever. I mean, but this is good for me. It's fun for me. I like talking about the markets, and it was a lot of fun. Cheers, y'all.